Hello, it's Friday the 7th of January. I'm David Wilder, Editorial Manager at Capital Economics, and this is your Week in Review. And it's a week in which we estimated that upwards of 5 million Americans could be isolating as Omicron sweeps the US. That would mean Omicron having a bigger economic hit in the opening months of 2022 than many analysts think. It was just one of our latest reports published this week on this new strain's impact. Our UK team highlighted the risks of increased consumer caution. Our EM team analysed the latest data from South Africa to show how the virus wave there could be burning out. And a report from our Australia service discussed why Omicron could be inflationary and the RBA's response to that. While financial markets have largely taken Omicron in their stride, they're proving sensitive to increasingly hawkish noises from the Fed. US equities fell sharply this week after the latest Fed minutes showed more willingness to get on with tightening than previously thought. In our take on the minutes, we highlighted the risk that the Fed actively shrinks its balance sheet this year through asset sales, as a supplement to, rather than as a substitute for, rate hikes. Our markets team's been explaining that rising government bond yields, high valuations, and baked-in expectations for corporate earnings make for a cautious outlook for US stocks in 2022. Following our top-down World in 2022 publication at the end of last year, we've also started publishing this week year-ahead outlooks across all our services. Next week, we'll be launching a special page where you can find all our analysis on what to expect this year. From Eurozone inflation risks to San Francisco apartment returns to what's likely to happen as Xi Jinping's second term as China's leader comes to an end, and of course what the Fed's going to do. All the research I've mentioned and much more is available on our website, but that's all I've got time for now. Have a great weekend.